Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: hold $70,000 of Bitcoin per year in your Fidelity Roth IRA tax-free. This is your chance to get answers. Please use the chat to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's first lay the foundation by going over the Fidelity offering, which is their crypto IRA that they launched in April of 2025, so earlier this year, which does allow for direct cryptocurrency investments. Now, this is restricted to certain account types, so it's not going to be for accounts that are opened up for solo 401k plans, but we'll talk about how one could transfer funds from their solo 401k to an IRA at Fidelity in order to invest in cryptocurrency, specifically a Roth IRA. So one of the account types that is available is a Roth IRA, as well as rollover IRAs and traditional IRAs. The cryptocurrencies that are available via the Fidelity crypto IRA offering include Bitcoin, Ethereum, and Litecoin. The eligibility requirements is that the individual needs to be a US citizen, age 18 or older, and then only for certain states. So for example, it's not available in California among other states. In terms of the Fidelity fees that they're charging for their crypto IRA offering, there are no account opening fees or maintenance fees, but there's a 1% spread on all transactions. Storage would be cold storage provided by Fidelity Digital Assets. And in terms of funding, it's cash only via a linked brokerage IRA account. So for example, if you're funding a crypto IRA that's a Roth IRA, it would need to be funded via a separate Roth IRA at Fidelity. Now, the considerations for solo 401k account holders are that, again, they are not opening up accounts. Fidelity at this time is not opening up accounts for third-party solo 401k plans that allow for direct cryptocurrency investments. So you would need to transfer funds from the solo 401k to the IRA at Fidelity, and then from the IRA at Fidelity to the crypto IRA that allows for direct cryptocurrency investments. So that means that you need to consider the solo 401k distribution rules, which generally provide that you need to meet a triggering event, such as being age 59 and a half or older, unless an exception applies. For example, rollover funds, so funds that were rolled into the solo 401k, say from another retirement account, such as a former employer plan or a pre-tax IRA, they can be rolled out at any time without needing to meet a triggering event, as well as voluntary after-tax solo 401k funds. So that's where the Mega Backdoor Roth solo 401k comes into play, because our solo 401k plan does allow for Mega Backdoor Roth solo 401k contributions, which is really a voluntary after-tax solo 401k contribution. So voluntary after-tax solo 401k funds, they may be transferred out of the plan without needing to meet a triggering event. So for example, one could make a voluntary after-tax solo 401k contribution, then transfer those voluntary after-tax solo 401k funds out of the plan to a Fidelity Roth IRA brokerage account, and then from the Fidelity Roth IRA brokerage account to a Fidelity Crypto Roth IRA account that would allow for direct cryptocurrency investments. Now, this is going to have to be a cash transfer, so no in-kind transfer. As mentioned up above, Fidelity only opens the crypto Roth IRA in certain states, for example, not in California. No personal crypto wallet. So, as mentioned on the prior slide, the storage option would require storing on Fidelity's digital asset platform. So, no personal crypto wallet storage for these Fidelity crypto Roth IRA investments. Now, how could one get to up to $70,000, as we mentioned at the outset, of Bitcoin? Well, one would need to make a $70,000 voluntary after-tax solo 401k contribution, then transfer the $70,000 to the Roth IRA brokerage account at Fidelity, then transfer the $70,000 from the Roth IRA brokerage account at Fidelity to the crypto Roth IRA account at Fidelity. Now, one could do that with respect to their solo 401k through my solo 401k financial if they have the self-employment income to justify it, because that's what they call a Mega Backdoor Roth solo 401k contribution. You're making a voluntary after-tax contribution, which our plan allows for. Now, you can contribute 100% of your earned self-employment income for 2025 as a voluntary after-tax solo 401k contribution, assuming that you don't make any other contributions to the solo 401k and assuming that you're not making any other contributions to a 403b plan because of the 403b exception. So, for example, for a business that's taxed as an S Corp or a C Corp, self-employment income is W-2 wages that the individual receives from the S Corp or the C Corp. So if you have at least $70,000 of W-2 wages from your S Corp or your C Corp, and you don't make any other contributions to the solo 401k, and you're not making contributions to a 403b plan, then you could contribute 100% dollar for dollar up to $70,000 as a voluntary after-tax contribution, and then transfer the funds out of the solo 401k to a Roth IRA brokerage account at Fidelity, and then from the Roth IRA brokerage account at Fidelity to the crypto Roth IRA to invest in Bitcoin and BTC. Now, keep in mind that Fidelity will open up brokerage accounts for a third-party plan. So all of these transfers could be occurring at Fidelity. First to the brokerage account for the solo 401k for voluntary after-tax funds, then to the Roth IRA brokerage account at Fidelity, then from the Roth IRA brokerage account at Fidelity to the crypto Roth IRA account at Fidelity. And just like any other Roth account, you're going to have the potential for tax-free growth. Potential meaning that when you take a distribution from that Roth IRA, you take that distribution as a qualified Roth distribution, so it's totally tax-free. Now, the requirements are that you have to be self-employed. That's what enables someone to set up a solo 401k. So that means that you're reporting earned self-employment income on your taxes with no non-owner, non-spouse, full-time W-2 employees. And that's really no W-2 employees working for any business owned by that individual or a spouse, if any. So earned self-employment income would include income reported on Schedule C in the case of a business that is taxed as a sole proprietorship or a single member LLC taxed as a sole proprietorship. W-2 wages in the case of a business that's taxed as an S Corp or a C Corp, or income reported on line 14 of a K-1 in the case of a business taxed as a partnership. Then you need to set up a solo 401k plan through a solo 401k provider like my solo 401k financial that offers a plan that supports Mega Backdoor Roth solo 401k contributions. So specifically, you would need a plan that allows for, number one, voluntary after-tax contributions, and then number two, in-service distributions, because you'll have to transfer those voluntary after-tax solo 401k funds out of the plan to the Roth IRA. So it's going to make sense to not only work with a provider that offers a plan that allows you to make those Mega Backdoor Roth solo 401k contributions, but also has experience in helping other clients through the mechanical steps of opening up a separate after-tax account, as well as providing the ongoing compliance support. Because even though that first step when you make that voluntary after-tax contribution, even though the voluntary after-tax contribution doesn't need to be reported on the personal tax return or the business tax return, or even the W-2 if your business is taxed as an S Corp or a C Corp. So the contribution, the after-tax contribution, doesn't need to be reported. The second step, when you transfer those voluntary after-tax funds out of the plan to a Roth IRA, that does need to be reported on a Form 1099-R issued by the plan. And we provide that ongoing support, compliance support, as an optional free service for our customers. In other words, as long as our clients let us know about that transfer in a timely fashion, and they can do it quickly and easily on our website, there's a form that customers use to provide us the information that's needed, then we'll prepare that 1099-R as an optional free service. In other words, no additional charge. So how much can you contribute? Well, the limit for 2025 is the lesser of self-employment compensation and the overall limit. So the overall limit for 2025 is $70,000. Now that's reduced by any other contributions made to the plan. As I mentioned, you need to deposit the voluntary after-tax contribution into a separate sub-account. It's not impacted by contributions made to another plan, such as a day job plan, with the one exception being the 403B exception. That's what we talked about up above in our quick example, that we were assuming that the individual was not making contributions to a 403B plan. So here we've got a quick scenario just to continue to paint the picture. Let's assume that the self-employed business is taxed as an S corporation. The individual is under 50 years of age. They do contribute to a day job 401k plan. So let's say they have a W-2 job, but they also have a side business that they operate through the S corporation. They have $100,000 of W-2 wages from their self-employed business, but they also are maxing out their contributions to their day job plan. So they're contributing $23,500 to their 401k at their day job. And their goal is to be able to maximize those after-tax contributions because they want to be able to transfer the funds out of the plan to a Roth IRA so they can invest in Bitcoin at Fidelity. So in this case, they could contribute the full $70,000 because that after-tax contribution limit is not reduced by contributions made to another plan, such as a day job plan. So they can contribute 100% dollar for dollar of their self-employment compensation, which in this case is the W-2 wages from their business tax as an S Corp, deposit those funds into an after-tax solo 401k account, which could be a free brokerage account of Fidelity, then transfer the funds out of the after-tax solo 401k brokerage account to the Roth IRA brokerage account. Now that transfer is going to be reportable, so they'll let us know. They'll provide us the information about that after-tax to Roth IRA transfer using the form on our website, so we can capture the information and prepare the 1099-R. And then they can transfer those funds from their Roth IRA brokerage account over to the crypto Roth IRA at Fidelity in order to be able to facilitate a direct cryptocurrency investment in Bitcoin. So yeah, so here they contributed the full $70,000 as an after-tax contribution for 2025. And here again are the steps. So they make the contributions to the after-tax account, which can be a brokerage account at Fidelity, transfer the funds, convert to Roth. They could choose to go to either a Roth Solo 401k or Roth IRA. Because we're assuming that they want to be able to invest in cryptocurrency directly on the Fidelity platform, they'll have to go to a Roth IRA, which is going to be a brokerage account Roth IRA first, and then from the brokerage account Roth IRA, transfer to the crypto Roth IRA at Fidelity. And then again, they'll use the applicable form on our website to let us know about that after-tax solo 401k to Roth IRA transfer so we can capture the information needed to prepare the 1099-R. So while there is a deadline to make the after-tax contribution, it would need to be contributed by the business tax return deadline, including any timely filed extension. So if this is an S Corp and they're making the contribution for 2025, they would need to make that after-tax contribution by March 15th of 2026, or September 15th of 2026 if they file a timely extension for their S corp return. So there is a contribution deadline to make the after-tax contribution. There is no deadline though to transfer the funds from the after-tax account to the Roth IRA, but you can transfer the funds right away, and most would want to do that anyways so they could start investing. So again, the after-tax contribution itself does not need to be reported, but the subsequent transfer would be reported. And that would be reported for the year of the transfer. So if someone's making a 2025 contribution in 2026, because again, the deadline is the 2025 business tax return deadline, including any timely filed extension, the transfer is not going to be reported until 2026. So it'd be a 2026 1099-R. Here's a slide with a visual of how it might look. So the individual has an after-tax solo 401k account that might have another, say, pre-tax account. Let's say they have other pre-tax money in their solo 401k. So they first deposit the after-tax contribution, then it's transferred out of the plan to a Roth IRA, which this would be, say, a Roth IRA brokerage account, and then it's transferred again out of the Roth IRA brokerage account over to the Roth IRA crypto account at Fidelity that allows for that direct cryptocurrency investment. So hopefully that's helpful. Thank you so much for checking out this presentation today. If the information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get mentioned, that you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We'll give it a moment to see if any other questions or if any questions come through. We really appreciate the chance to discuss questions, so please don't hesitate to chat those over. We'll also highlight that we have the largest community of solopreneurs and solo 401k owners out there. You can quickly and easily join at mysolo401k.net/my community. It's totally free to join. All are welcome. We've got active forums on there. We have a library of videos and webinars. So there's a lot of great ways to learn and to share the knowledge. So please don't hesitate to join again at mysolo401k.net/my community. So as far as E-Trade, my understanding is that they do not allow for investing in cryptocurrency directly through a retirement account. Of course, we're totally neutral as far as where the brokerage account is set up at. And you can definitely have your brokerage account for your solo 401k through us at E-Trade. And we'll help you prepare the paperwork to open up the accounts at E-Trade. Now, among the brokerage offerings, Fidelity is definitely the #1 most popular brokerage firm where our customers are opening up accounts. Schwab would be #2. There are certainly those that have opened up at E-Trade, but the feedback has been mixed. Some have reported that it can be a cumbersome process, for example, to open up brokerage accounts at E-Trade. But again, we're neutral and we don't have anything against it per se. We're just sharing that feedback. And then, of course, if you're looking to invest in cryptocurrency through a Roth IRA, again, the understanding is that E-Trade doesn't currently at least offer a Roth IRA that does allow for direct cryptocurrency investments. So if you were to do it through Fidelity, it's certainly going to be much easier to open up the brokerage account at Fidelity because it can be that direct transfer, right? From the brokerage account at Fidelity to the Roth IRA brokerage account at Fidelity, then from the Roth IRA brokerage account at Fidelity to the Roth IRA cryptocurrency account that allows for direct cryptocurrency investments. Great question. Does Fidelity handle the 3 sub-accounts that belong to the same plan title? Yes, they do. And that's a very common setup where you've got, say, one brokerage account at Fidelity for pre-tax funds, a second brokerage account at Fidelity for Roth 401k funds, and then a third for voluntary after-tax solo 401k funds. But keep in mind, if the goal is to get those funds into a Roth IRA at Fidelity that allows for direct cryptocurrency investments, then the flow would be what we were discussing, where it was first going, where the individual would first make a voluntary after-tax solo 401k contribution to a voluntary after-tax solo 401k account. So that's one brokerage account at Fidelity, opened up under the name of the plan for voluntary after-tax funds, then transferred out of the plan to a Roth IRA. So it wouldn't go to a Roth solo 401k, it would go to a Roth IRA. Now, we'd first need to go to a Roth IRA brokerage account, and then from that Roth IRA brokerage account to the Roth IRA crypto account, because per Fidelity's Roth IRA cryptocurrency rules, the only way to fund the Roth IRA crypto account is from another Roth IRA brokerage account at Fidelity. Great question. I have both W-2 and 1099 income. I have a 403b that I contribute $23,500 to, and then my employer also contributes $11,500 to. Do both of those contributions decrease the amount I can contribute to the solo 401k? Yes, they do, because of the 403b exception. So under that 403b exception, all of the contributions that are made to the solo, or excuse me, to the 403b. So all the contributions made to the 403b, whether employee or employer, together with any contributions that the individual would want to make to the solo 401k, the sum of those contributions cannot exceed the overall limit. Thanks for bringing the good questions. Thank you so much for the great participation. We really appreciate that. Please continue to participate. So 457 contributions, those are not aggregated. So those do not reduce how much one can contribute to a solo 401k. It looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. Got a few more questions that came in. Wonderful. Can you deduct as a sole proprietor the employer expense from the total provider fee and also get the contribution, get the auto contribution credit? Yes. Yes, the EACA credit is non-refundable, but you can roll it over to the next year using the 3800 form in consultation with your tax advisor. So if you don't have a plan with us, but you have another plan, let's say you have a basic plan with a discount brokerage and you are self-employed with no non-owner, non-spouse, full-time W-2 employees, then you could upgrade your plan to our plan, what they call restate your plan. And if you just submit our online application, you'll see that we ask if you have an existing self-employed plan, and so we can capture the information we need to be able to restate your plan. And then when we draft the restated plan, it'll include the auto enrollment feature. So it'll automatically include that to make the self-employed business eligible to start claiming the credit. So even existing plans that are upgraded to include the feature are going to be eligible for the credit, or the business that adopts those types of plans will be eligible to claim the credit. Okay, we'll grab your email from the registration page. One second, let me get that. I see your email here. But feel free to email us at support@mysolo401k.net. But I do see your email, and we'll take a look at your plan and email you regarding how to upgrade your plan to be eligible to claim the credit. All right, thank you so much. Let's see here. All right, until next time, everyone. Thank you so much.